Hello, this is John Piper with the weekend video clip, and it's Friday the 3rd of January. I brought the video clip forward today, give you the action in the markets yesterday, in particular on FTSE. Happy New Year. I hope 2014 has been a great year. Certainly plan it to be that way. Before I start, I must mention that the risk warnings have changed on this email. Tips has gone through a reorganisation, so please read the emails. The basic gist is that we don't give advice as such. BigCore has always been an educational service. In fact, the whole purpose is to help you develop your own trading styles, make your own decisions. We do make occasional trading trading suggestions, sorry, not recommendations. The whole point being that you can then decide for yourself how to trade, what to trade, which is a far more successful approach than merely taking tips. Now, the point I want to make on this hourly chart we're seeing here of FTSE is that we gave a suggestion of buying down there on that particular day. I think 64.60 was the where FTSE was at the time. We then had the Fed news come out. If you followed the suggestions in the video clip, then you'd still be long now. In fact, if you didn't, then you'd been stopped out. Again, if you follow the suggestion, obviously it's all up to you what you actually do. So the point being that we now had a 1, a 2, and now I've got a nice solid third wave. Now we have what looks like a fourth wave with a bit of a buying spike today. So if this is the fourth wave, we can expect new highs. Not guaranteed. The action has been for Christmas and the New Year pretty negative in the sense that we had for the first 2 weeks of December negative action, then a strong rally just into Christmas and New Year, then a pullback on the first trading day of the New Year, which is unusual, as you may have read from various other commentators. But the wave pattern does suggest that we've got one more peak to come and then a sell-off. So for those of you still long, I would suggest tightening stops. Obviously 6-7 is the area that looks good, with a view to getting out pretty quickly now. But there would appear to be a last gasp in here. Now, an important point in this sort of scenario is that often the last gasp is just that and actually fails to make new highs. So we start selling off without seeing new highs, and that would be a suggestion maybe that you should be looking to go short of the market, which is my current focus. We've had a few short positions in place for a while now, far too long in fact, which I want to add to. They're always 50% positions, but I'll be looking to add to those initially by spread bets, and obviously it's nice to get in at the higher levels rather than the lower levels. But we now have a very, very clear pattern suggesting this one last move up here. In fact, this rally here was over 100 points, so 6.8 is a key area, as is 6.950, which was the peak in 1999. So that's 15 years ago now, and so there is significant resistance around 6.8. Whether the market may better make it above that, I don't know. But certainly, if it does, it would question the pattern slightly. Not a huge amount. 6.820, 6.850. But that looks like what we're going to see looking at this chart now. We have got a fairly clear corrective fall, and we've got a fairly clear bounce this morning. Although at this point, it's not a strong bounce. I wouldn't be hugely surprised to see it fail, to be honest, but at the moment it's looking like we have got that fifth wave to come in. Okay, here's the DAX. We've got a similar pattern. If we go back to here, then we've got 5 waves coming in from the August low, 1, 2, 3, 4, and then the fifth wave here, we just subdivide them. So this is again a similar pattern to FTSE with a 1, 2, then a 3. Quite a big 4. This is quite a sharp 4 compared to FTSE. And the rally again is feeble at this point in time. But again, there is a case for one more rally to come, a stronger case that it might fail, but then the Dow is a lot more dynamic than the FTSE. So similar kind of pattern on the DAX. The Dow. On the Dow, we've had this bounce off the trend lines. So we broke through, retested, bounced. But that too has now got a 1, 2, 3 with a 4 here. So again, a case for one more rally to come. So the first week or two of January is going to be pretty critical, as I see it, and we need to monitor what's going on carefully. I'll have a quick look at the Nikkei before we finish today. The Nikkei has broken out above the major resistance I've been talking about, It's done as I expected it to do. The suggestion was to take 50% profits above 16,000. That's now been triggered. We got in around the 10,000 level, so around 6,000 points. That was a trade we entered at the beginning of 2013. Now for now it looks positive, but there is another 5-wave form. We'll go down a scale. This is a weekly chart. Right, you can see here on the daily chart we have got a 1, 2, 3, 4, 5. Sometimes you see acceleration here. You can the fifth, what counts as the fifth, could in fact be an extended part of the third. So we see acceleration here. That would apply. We're still 50% long here, following the suggestion. I mean, quite how you count this lot. I mean, it could be some kind of triangle. So it may be that that was a fourth wave, and this is a fifth wave coming in. It still counts well as a fifth wave, to be honest. But it could be an extend. It could extend. What I'm trying to say. But right now we're still in dangerous territory. Markets often do false breaks. If other markets fall back early in January, then the Nikkei might do also, which is why we took those profits. And of course, it's a lot of profits. It's a very, very good trade. Right, a quick look at gold. We're having a bit of a bounce here. Not much to write home about at the moment. I mean, obviously it is major support, so a bit of a bounce at major support is not a big deal at the moment. But gold may have a good year this year. We see equity markets fall back, and I think firstly the bull-bear ratio is very high at the moment, suggesting that most people are in the market. When that happens, the market has a tendency to go down because the potential is for the people who are long to sell. And there's no one left to buy because everybody's always bought, so that is a big negative for the market. So equities fall, gold may have its year this year, but not enough to go on here at the moment, I don't think. I'm still holding long gold as I mentioned before. Pound dollar. Well, again, looking positive. We're seeing a bit of a pullback. Not much to write home about. We remain above these trend lines. Whilst we do that, this looks positive. Alright, pound euro, quite a big fall here, but it's given way to a rally, and we're retesting the high. So again, looking positive for now. Obviously, a failure at that point would be a different kettle of fish. And euro dollar is looking a bit toppy with a bit of a spike there, but again, not enough really to get too excited about right at this moment in time. I have to monitor how that goes from here. Okay, that's all for today. I hope you found that interesting and useful. I'll be back with the report on Tuesday morning. Have a great year, and thanks for listening, and bye for now.